What's going on, everyone? So I'm just going to make this video real quick to give a little bit of advice. It's basically how to master the markets, and it's using an unorthodox technique. Basically using a data standpoint to base off your decisions, because as we all know, the market is very controlled, not by humans per se, but by an algorithm, and algorithms are trained to play off of human emotion. So the way that I've been approaching it before this year is to go into it from a psychological standpoint, but opposite. It's almost counterintuitive. You play off of the algorithm's patterns instead of the other way around. So basically, I wanted to show you in this first video where to get the data, because that is the first crucial part in making this work. Because I plan to continue doing this after the dust settles, whenever that may be. And may be good to get you up to speed on my strategy a little bit. So today's market narrative. Today there are 3 different kinds of traders that I've personally observed. And keep in mind, all of this is my opinion. You don't have to believe anything I say. I don't care if you do or not. This is just my personal opinion and how I go about things. So there's 3 kinds, in my opinion. We have technical traders who use technical analysis for bullish and bearish signals, all sorts of things there. We have fundamental traders that go more off of the underlying company, their future outlook, how their balance sheet looks, their debt to ratio, things like that. And then we have market analysis that goes off of emotions, psychological emotions. Then you have a little bit combined with technicals. And then in the background, you have the news organizations who are owned by Wall Street, constantly churning the narrative to basically pave way for reasons behind price movements. So my opinion personally, and don't take offense to this is not to attack anyone, this is just my personal opinion and my style. Fuck all that shit. Those of you who plan on staying with me after the dust settles here, you will quickly learn my trading style is pretty unorthodox, but a lot of shit I do in life is unorthodox because I'm a firm believer in whatever is out there currently is not, it's not the best way. There's always a better way to do something. Just because someone's been doing something forever doesn't make it right, especially if there is, in fact, a better way. So what do? Pattern recognition using data. Is it emotional pattern recognition? No. Am I playing off other people's emotions? No. I'm playing off of the patterns that are basically created by the algorithms that they can't escape this factor. There's always going to be a pattern to look at. So that's basically what point I'm trying to make here. Now, I get it. You're wondering if I'm retarded. Well, yes, I am retarded. I say this all the time. However, so are the markets. Have you seen them? It's this big convoluted mess that we've all seen. Crypto follows each other, especially AMC and GME follow each other. You have cycles that are identified all over the market in several different stocks, and that's what we're here to take advantage of. More on that later, though. This video is more about data and how we are going to first figure out where we can pull this data from and what data we will need to start trading based off of pattern recognition. And when it comes to data, there's 2 types of data: relevant data and irrelevant data. Let's start with the relevant data. Things like days to cover, short interest receipt dates, only the dates, and not from Ortex. Fuck Ortex. The only short interest data that's worth anything is the short interest report from the New York Stock Exchange itself. Anything else should be irrelevant, because there is no such thing as a daily short interest receipt yet. So twice a month we will get short interest reporting, and I take that with a grain of salt as it is, because we all know short interest reporting is bullshit and can be gamed. So we also have volume data, closing price data, option put and call, price ratio data, money market fund data, tape A, B, and C consolidated data. That's the stock market ticker tapes, short volume data, ETF holding data, float size and how it changes over time data, things like that. Though that's what's important. Now, what's not important, what I hear a lot of people discussing all the time, is things like number of shares out on loan, cost to borrow fee, price action data, short utilization rate, the number of synthetic shares that exist. All of this shit is irrelevant. It can all be gamed, And there's nothing, like none of this hinges on anything else. Like days to cover hinges on the volume data. That's why it's good to have both of them. None of this shit affects anything else on this list or this list. It's all irrelevant bullshit because it's all based around this short interest. The only thing you're going to get that's worth a shit from this is that twice a month reporting. So keep that in mind. So where do you find this data? Well, put call ratio interest data, very, very good to use Alpha Query. Now, this does cost money per month. I'm not trying to get you to sign up for this. What you should do is you should make an email, whatever, and just exploit the free trial, because you get a free trial and that gives you basically 7 days to sit there and just get as much data as you need while you can. I would not recommend paying for it. I would just exploit the free trial. But it does have useful info like the 180-day scale, put call ratio. You have a 10-day, 20-day, 30-day, 60-day, 90-day, 120-day, 150-day. You can use all that data to your advantage. Now, there may be a better source out there than this because I need to find one with a CSV downloadable option, which would make it a lot better, because it's not about only looking at the data. It's about extracting the data, putting it on an Excel spreadsheet, and seeing what it looks like next to each other, because you'll find some crazy patterns. Short data. The only short data that you should be getting is the short interest receipt dates data that's released by the NYSE twice a month, and short volume data. Anything else is bullshit. So short volume, where do you find it? There's a couple of places, and luckily I didn't verify the accuracy of Stonko Tracker, which makes it very, very easy to locate the short volume data in one spot. I would recommend using Stonko Tracker because it is accurate. However, if you want to see for yourself, just to make sure, you can go to FINRA. It does pull from FINRA, and FINRA provides the off-exchange short volume data, and you can also get a little bit more historic data from there as well, because Stonko Tracker only goes back so far, I believe. And if you do happen to want to try out the FINRA, you just go to their website in the short data section, and then you'll see the consolidated NMS, which is the one you'll want to get. It has everything right here in one file. ADF's still there, however, it's not used, so that's just irrelevant. But FINRA consolidated NMS pulls from all of the off-exchange venues, like the TRF Carteret, which is that big market share consumer, that's been taking over the markets for quite some time. Then you have ETF holding data. You got to be very careful with this data, because if you're going off Fintel, they're often wrong on a lot of different things. The only reason I use Fintel is for the short interest receipt data, because it's just conveniently there. And for 13Fs too. But always double check the 13Fs on the SEC Edgar website just to make sure FINRA is accurate. Average share price, I ignore it. I ignore it 100%. All I pay attention to is if it's a new position or not, and how many shares are reported. So we can tell based off of this right here that FINRA is incorrect, because FINRA thinks that IJR still has 3.742 million shares. However, that's not the case, because if you look on their website as of September 9th, if you search GME, there's no matching records found. So if you're going to look at ETF data, there's not a service that provides it on a consolidated basis. So you're just going to have to individually go to the issuer website and check their holdings. That's the only way, the best way. So list of resources for data. We have put call ratio, technical analysis data provided by alphaquery.com. Use the free trial exploit only. I would not spend a penny on market data. It should be free. Don't spend money on this data. Please don't spend money on Ortex or Fintel, for the love of God. Okay, you also have share lending data that can be found at the OCC. The OCC is a great website for all and anything options related, and share lending data. It's the only place that I know of that provides share lending data and historical data. All of this should be downloadable via CSV other than the Alpha Query website. So this one's a big one. You can do stock loan volume. You can do the most active options, monthly and weekly volume statistics, historical volume statistics, exchange volume by class. There's even a query. Query. Oh, man. Anyways, this video's over. But yeah, that's the first part. So once you have the data, then you can find the patterns in the data, and then you can make some badass decisions based off of what you found. And not a lot of people do this, so welcome to retardation.